Coming here is about credit, building your credit score. You have to have your emergency fund account, you have to have your short-term account, and your long-term retirement account. That is why the first thing you do when you get paid, you have to pay yourself. I needed new car because people were driving new car. I went into an Honda dealership one night and came out with 2 new cars financed. You're laughing at me. It's okay. 10,000 credit card debt, 2 mortgage on a house, 2 car loans. Fast forward today, my house is paid off. I have no credit card debt, no car loan. I have not paid for clothes in the last 6-7 years. If I was a 17-year-old with what I know today and my parents cannot afford to pay for my college, I will go the community college route.
Let's talk about sending money home. So
there's the rule of 72. What that means is,
Mr. Babajide, thank you so much for being here today. Really glad to have you on the show, on the Conscious Lane, especially since this is our first episode. So many years ago, you left your home country, Nigeria, to begin a life in the US. You've now lived here for almost 3 decades, and you've been an accountant for almost the same length of time. You're also a director of a multinational company, and you're a licensed investment advisor rep. So I feel like when most people think about success, they paint a picture that looks like your profile. And I would like us to go all the way back and for you to just start from the beginning. So before all of the credentials and achievements, who was Mr. Babajide?
Well, thanks for having me. Glad to be here. Well, I was just a boy growing up in Nigeria, just like every other boy growing up in Nigeria. So I grew up, in a medium-sized family, medium income or middle class income, and the thing is, go to school, do well, get a job, start your own life. So, and I've always wanted to be an accountant growing up because my dad was an accountant, my uncle was an accountant, and there was most male in my family were accountants. So that's what I gravitated towards, becoming an accountant.
Okay, and then when you came to the US, what did you find? What was surprising to you when you arrived? Because I know, being someone who also grew up in Nigeria, I know that people's experiences differ when they move to a different country. So what was your experience like getting here and at the time that you did?
Prior to coming here also, I was already an accountant in Nigeria and I was working. Okay, I was working for one of the big fours then, Otto Anderson. Before then I did, work with my uncle. I worked with my uncle's friend also in a small accounting firm. I graduated from Yaba College of Technology. I was a chartered accountant. After graduating college, I was doing my youth service, okay? That was how I got to know about the US Green Card Lottery, which I mailed in my application, and I was one of the lucky winners of the Green Card Lottery. That's how, I migrated to the US, because I won the Green Card Lottery. Like I said, I was already living, I'll call a normal life in Nigeria, okay? I was at the entry level of my career, with the hope of just growing. That was not in my plan, but I think that was just God's plan for me winning the Green Card Lottery. So leaving Nigeria, okay, I thought with all the credentials that I have was going to be easy, just come here and things, I'll pick up from there, but trust me, it's not that way. I try getting a job, in the accounting field directly, but I would say it was not as easy as I thought it was going to be. But I did get a job in my field. To answer your question, I guess one of the big difference, at least for me, is I would say money. Like growing up in Nigeria, everything is on cash basis. Okay, at least at that time, there's no credit. You buy everything. You know, even your parents, they send you out to go and get something, they give you, you know, money,
Yes.
cash.
Yes.
Okay, and they'll tell you, bring back change. So most of us will understand money because, you know, you're given cash. You know, when they ask you to buy something, okay, now I'm going to be saying for 1 naira and they give you 5 naira, you know, you're bringing back 4 naira. So you understand money. That in order to get something, you have to, you know, you have to have money. Gone are the days of trade by barter. The medium of exchange is money. You want something, money, you get it. You get change. Even our parents, you know, building a house, they save, they buy the land, they start building. Even some of us, before they finish building the whole house, they may do a room where you move in and they're building where you're still living in there. So there's no credit. You have to save to get, you know, to buy a house, even to buy a car, you have to save. Coming here, okay, then it's about credit, you know, building your credit score. Everything is on, you know, credit card. Not that there's no cash, but not everybody walks around with cash. You go to the store, everybody's using credit card to make payments. You know, that was one of the big eye-opening for me, that, you know, it's all credit base. And it's not as if when you come here, you go to a class and they teach you, you know, these are how things work, this is how the system works.
Yeah.
So we come here, we don't fully understand how the system works.
Yes.
Okay? And that, I think, is the beginning of the problem. Because the thing is, if you don't know the rules of the game, how are you going to win? So we come here, you know, we do normally focus on the career side. You know, I give us that, you know, like going back to school, you know, getting additional, what do you call it, credentials, if you will, to be able to, you know, get into your particular field and move on. We do all that. But I would say the money aspect is very important that we don't know about. For example, again, you know, getting a job. If you get a job, okay, they give you the benefits package, okay? And most of the time, they don't really explain all that to you in terms of the benefit. For example, one of the benefits is the retirement plan, okay, signing up for 401k. A lot of us don't know what 401k is, you know, that you need to sign up. The company, you know, is for your retirement. The company is going to give you some money if you put in some money. Some people read it, they don't even understand it, and it may take you some years before you know it. And that might have set you back, you know, because if you know it from the beginning, it's going to help you on the long run.
Okay. So I think you just described the experience of a lot of people who are immigrants. You used we a lot when you were answering. So by we, I mean, like, I'm guessing you mean like immigrants,
Yes.
right? Like immigrants and people who did not grow up in America. And, you know, I think it's definitely accurate. If you don't know the rules of the game, how would you play well in the game? So would you say that over the course of being here, you kind of understood the rules of the game? What does that mean?
I think so. It took me a while
Okay.
to understand the rule of the game. But I'll tell you that I've always been a very cautious person, okay? But even having said that, there are some mistakes that I make.
By that you mean like how the system works, right?
In terms of money.
How the different systems in America works, especially the financial system.
Thank you. The financial system. So use it to your own advantage and have a plan. Okay. In terms of financial plan. Okay. So I'll tell you, when we came here, we stayed with my wife's cousin for 6 months. Okay. We got our own apartment after 6 months. We got a 1-bedroom apartment. From a 1-bedroom apartment, okay, my first son was born in that at that point in time. 3 of us in 1-bedroom apartment.
Must have been uncomfortable.
Huh?
That must have been uncomfortable.
Not really. It's 1-bedroom apartment. We have our living room, our kitchen, the bathroom, dining room, and the 1-bedroom. It's not bad. Just three of us.
Okay.
My first car was $500. My first car was $500.
What year was this?
Huh?
What year was this?
That was 1998.
Oh gosh, I wish I could still buy a car for $500.
1998, yes.
Yeah.
So, one bedroom, 2-bedroom, 3-bedroom. From 3-bedroom, we bought our first house. Okay? I will tell you that, in hindsight, I'm not sure we were ready for the house. Okay? Because obviously, we did not put enough money down. I want to say we put about 5% or less than 5%. They made it work for us to get the house. We got the house. We did a lot of improvements, like changed the carpet, bought a new refrigerator, new TV, did a lot of stuff. All that were on credit card because, we want to invite our friend that we've bought a house to, have a housewarming party. So you want things to be in a new, living room, set, painted the house, it was on credit card. But it was a big shock when we got the first bill. That we thought it was a mistake. How, you know what I'm saying? And it was in the summer time, so we had blasting our AC. So I'll tell you, the first bill was a shock. But what I know now, okay, for you, when you want to buy a house, you need to have at least 20% down payment. And you have to have money set aside. Okay? And you don't need to have everything new. You have to know that you are now an homeowner. And if anything goes wrong, it's all on you compared to when you're in an apartment. Okay, you can call the apartment people to come and fix things because that's part of what they do. But once you're a homeowner, you have to take care of everything that happens right there.
Okay, so one of the decisions you wish that you could have waited on was buying a house. And maybe we can just use that as a segue to talk about some of the mistakes that people make, or because you advise people, and I'm sure some of your clients are maybe immigrants or young people like myself who are from all walks of life. So what are some of the mistakes that you see people make as far as like money is concerned? What are some like recurring mistakes that some of your clients are making or that you find yourself having to advise multiple people on?
The first thing I would say is understand how credit works, credit card works. You don't want to get into debt. You need to have a 3-system account.
What's that?
You have to have your emergency fund account. You have to have your short-term account and your long-term retirement account. What I mean by emergency, you need to have at least 3 months of your monthly expense, okay, in a money market account, high yield interest account. You need to have about 6 months of your monthly expense saved too in a short-term account. It can be a money market account, depending on, Then you have to have your long-term retirement account. You have to have that 3. What I mean is when you are working, okay, you work very hard for every dollar that you earn. So you have to make sure that every dollar that you earn is working for you, not against you. That is why the first thing you do when you get paid, you have to pay yourself first before you do anything. And by paying yourself first means maintaining those 3 accounts. That means you're funding those 3 accounts.
So how do you determine what the payments yourself should be?
I'm going to start with the retirement fund. Okay? If you are working for an organization and they have retirement benefits, either 401k, 403b, 457, TSP, whatever the plan is, the first thing you want to make sure that you are maxing out on whatever the company is matching. Okay? So that's part of paying yourself first. You need to max out. Do not leave any money on the table.
Doesn't matter how much you're making.
Doesn't matter how much you're making. You have to find a way within your budget to do that.
So because I've heard people say, well, I have a lot of obligations that I have to meet every month. I don't really think I can afford to do that right now.
Well, your question is young people coming in, or in case of my own example, when I came here, I can tell you that if I knew that, I would do that. Even though I have other obligation, but I should be able to do that. Because the long-term implication of not doing that is then you want to at least try to, if possible, and this may not be possible, to have a Roth IRA account and put money away in that as well. Okay? After that, then make sure you're building your emergency fund and short-term fund. What I've seen is between those 3 accounts, about 15% of your income should be going to those accounts. So that means you have about 85% left for you to do other things. Your rent, your gas, your grocery, your whatever. Okay?
So the emergency, the short term, and the long term should all be 15%?
At least 15%.
At least 15%. Okay.
At least 15%.
Okay.
I'll tell you that if you want to fund all the 3, it can go up to 25% of your income. So what you want to do is have a detailed budget. Okay? Because the way you have to look at that is there's a difference between wants and need. Wants and need. Okay? You want to at least satisfy your wants. That means, clothes, shelter, and food. Clothes, shelter, and food. And we don't need a lot of them. You don't need the best to do that. So if you're able to do all that, you should be able to be putting at least 15 to 20% away to fund those 3 accounts. You should be able to. Trust me, if you do that, it's just going to pay it's going to pay you on the long run.
Okay. So pay yourself first, emergency fund, a short-term account, and a long-term account. Then what?
I think if you have that in place, that's a good start.
Okay.
And also having a financial plan, if you will. See, ultimately, we're talking about young men because in your own case now, you're still single. I'm assuming you want to marry in the future. Okay.
That would be great, yeah.
Have kids.
Yes.
Okay. So starting now to have a financial plan is going to help you in the long run.
How does one create a financial plan? Because I think that's a very good thing to talk about. There's a lot of people, like in my friend group or my age group, or people who are just young professionals starting to work, and then we're all thinking, how do I even know if I have a plan? How do I even know if it's a good financial plan to have? So is there a process to creating like a good financial plan? Yes, we've talked about the foundational things that you should do, right? Having those accounts set in place. And then if you have like a match in your office for your retirement or at your workplace for your retirement, you should maximize all of those. But beyond that, how does one actually know that they're on the right track financially?
Good question. So, the way you have to look at it is, you have a doctor. I'm in American context now.
Yes.
Okay. You have a doctor. Okay. You do your annual medical checkup. Okay. If you're sick, you go see your doctor. You tell them what is wrong with you, your symptoms, and they prescribe things for you to get better. We also do our cleaning. We see the dentist every 6 months to do cleaning and whatever. They tell you, Then also we go for eye checkup. So similarly, you need to have somebody, okay, that's helping you with your financial plan. The problem with that is most financial planner or the firm, they deal with high net worth people. Okay. But even with that, you have people that can cater for, middle income or even beginners, and that's where somebody like me comes in. But it's not complicated. Okay. What you need to know is you need to make sure that you're properly protected. Okay. You don't get into debt. Okay. You only have, I'll call it good debt, not bad debt. Credit card is a bad debt. Buying a house is not a bad debt. You just have to do it right. And planning for long term. Ultimately, you want to be financially independent.
Mm.
That's the ultimate that you want to get to. So,
what's financial independence?
I think it's a place where, to me, I have no bad debt. I don't have money issue. I'm not stressed out with money. I can meet all of my immediate obligation without getting into debt.
So what I've found is that most people tend to spend to their limit. And I've spoken with people who make, little to people who make maybe 6 figures and even more than that. And it seems to be a trend that a lot of people will just naturally increase their spending as their income increases and find themselves in the same situation, the same financial situation that they were in, when they had less income. Is this something that you find within the people you advise? And if so, what do you tell them?
In the American context, I think it's not understanding how the system works, how money works, understanding the difference between needs and wants, and having a good financial background, if you will. So it's a combination of all that and wanting to be like the Joneses. You're showing off to each other. But to me, I think the basic thing is understand the use of money and how it can work for you and work against you. See, we don't need a lot in life.
Mm-hmm.
We human beings, we think we need a lot. We don't need a lot in life. And I think COVID kind of has taught some people some lesson, at least for me. Okay, I know we lost a lot of people, which is very sad. But I think there's some I would say, positive lessons that I've learned from COVID. I work from home for the most part now. Prior to COVID, I used to go into the office. Okay. And I'll tell you that I like to look good. Okay. I don't drink, I don't smoke. But one thing about me is I like to look good. I feel when I look good, I feel good, I do good things. Not that I spend a lot of money on clothing, but
Impact your confidence.
yes, my dress shirt, I was ordering it from UK, TM Louis. I'm not making TM Louis. All those shirts are in my closet now. I don't think I've worn them in the last 5 years. So we buy stuff. We're accumulating stuff that we don't need. Okay? We came to this world with nothing, and we're going to live with nothing.
No, I feel judged.
So if you boil it down to that and understanding the difference between needs and wants, don't get me wrong, you have to take care of yourself, you work hard, you have to do things, but we don't need a lot of things. And we just need to understand what is the essence of money and how to use money to work for us, not against us. And you don't need to compare yourself to anybody. When I was 26, when I came to America, I had no debt in Nigeria. I was living in an apartment. Okay? I came here. Okay? I started accumulating debt. Because that was the system. Until I knew better that no, I can do this in a better way. I can get a good credit score without maintaining credit card balance. I don't need a new car. Like if I tell you all the things that I've done, that I'm telling people not to do now, I've leased a car before. I will never advise somebody to lease their car. Okay? I've had car loans. I told you my first car was $500. I sold that car. I think I sold it for another $400 to somebody, to a guy that works at a gas station. Okay? I bought another car, but I bought it for cash, a used car. Camry, nice Camry. Okay, for cash. I saved to get the Camry. Okay? The Camry was totaled. We had flood in New Jersey. It was insured. I was giving money back. The cash that I was giving, okay, we used it to buy 2 used cars again. Then, fast forward, I needed new car because people were driving new car. I'm working. Colleagues are driving. I have to drive a new car too. Okay. We went into an Honda dealership one night and came out with 2 new cars financed. You're laughing at me. It's okay.
No. Oh gosh. Wow.
So, 10,000 credit card debt, 2 mortgage on a house, 2 car loans.
Wow.
Fast forward today, my house is paid off. I have no credit card debt. I have no car loan. Okay. My kids' college is fully funded. I have emergency fund. I have short-term fund. I have my long-term retirement account. I don't worry about money. I'm still able to give charity, do things that I need to do. I'm not buying TM Loan shirt again. I have a credit card that I used, I have one credit card. I use it and I pay it off, and it gives me reward. And in the last 5 to 7 years, both myself, my wife, and my 3 kids, we use the reward from the credit card for clothing. There are 3 brands that if I buy, I don't pay. The store clerks, or they know us. Once we come in, they know us. We're using rewards. We don't pay cash.
Wow, that's powerful.
Because we built, I use it to buy, what do you call it, gas for my car. I use it and I pay it off. I use it and I pay it off, and I'm building reward. And I can use the reward at 3 clothing brands. And I have not paid for clothes in the last 6, 7 years. I only pay if I go outside of those 3 brands.
And
See, I'm using the system to work for me.
Mhm.
I can get anything I want with my credit score,
Mhm.
but I'm not going to do that. They will give me a loan because of my credit score.
For an example of how banks like to give loans to people who don't need it.
Trust me, if I walk in anywhere to get a personal loan, I will get it. To get a car, I will get it with my credit score.
Okay, so we've talked about where somebody should start. Start with having all the 3 accounts that you mentioned. You've given some advice on when someone should and should not buy a house. You have to have saved up some cash, 20%. You've given advice as well on the use of credit card, how to use credit and debt in general. Is there anything else that you tell your clients or the people you advise, especially the younger ones?
If you're fortunate to get out of college without a student loan, good for you. Okay, one thing I will tell you today is education, you need education. But I'm not going to advise anybody to get education and be in debt. To get student loan. I would rather do it in a way that I don't have any student loan. Because getting education and having student loan is already setting you back. And once you start a job, you need to look at your paycheck. Okay, that you're working at, this is your paycheck. You need to understand your paycheck. Okay, and have a plan for that paycheck. And also know that you're not going to work for the rest of your life. So you need to start the plan now. Because trust me, I think you know this. In America, we are all employee at will. That means you can be fired for any reason or no reason. That means your job is not guaranteed. Okay? Just like you can give notice that you're leaving. Okay, usually, I advise to give 2 weeks notice. There's no law say that you can just resign today and leave. It's not good, but you can do it. Nobody's going to hold you. That similarly, they can fire you too for any reason or no reason. And it will be good, if you have somebody that can put a plan together for you. This is where you are today. This is where I want to be in 20, 30 years time. How do we make a plan to reach that goal? Because if you look at all the organizations that we work for too, they have a plan. Okay, usually they have what is called a strategic plan. They look into 5 years from now. From that, they have a yearly budget. Okay, from yearly budget, they do monthly forecast. Then they record actual results. Then now they compare the actual results to the forecast and budget and make corrective actions. Then there are 3 important financial statements that they look at. They review every month. Their profit and loss, their balance sheet, and their cash flow. And that's why your financial plan is kind of like your strategic plan. And looking at where you want to be, where you are today, what are things that I need to do to help me get to that target, and at a reasonable interval to see what are the progress you're making. Because your situation is not going to be, hopefully your situation is getting better. So you're adjusting your plan, towards getting to your goal.
Okay, let's talk about sending money home. So a lot of immigrants who live in America, some call it black tax, but in general, that's, something that people do. Sometimes it almost feels like they're required to. Some people are not, but, because you have loved ones or friends in the country that you had lived in before, you like to take responsibility. Was this something that you experienced, and how does someone navigate that?
Good question. I don't think you can avoid that. You just have to be intentional about that. Because if you look at from where we came from, it takes a village to raise a child. It's not only your immediate parents, that have contributed to your success, growing up. Some aunts, some uncles, friends have done something for you along the way. You know what I'm saying?
Mm-hmm.
So it's natural for us to give back, to help. It's part of human nature. You need to help. Okay, even if faith teaches us to help. But you have to be intentional about it. And that's why it goes back to what I said first. The first thing is pay yourself first. Meet your other obligation. Whatever is left, you can give to people. And knowing that you cannot satisfy everybody. No matter what you do, you cannot satisfy everybody. And even if you give people, they say, oh, this is just what it's giving me. As long as you know you've given the best that you can. You don't want to be a stingy person. There is a adage in our language. Can I say it in Yoruba and I'll translate it?
Go ahead. Yes, sir.
It says, Iṣẹ́ ló ṣe dá ṣe, owó ò ṣe dáná. That means, I'm going to try now. I work for an organization now.
Yes.
As an accountant. I do the job by myself. Okay? But the money that I'm getting from there is not just for me. I can't spend it alone. Okay? That's the way it is. Iṣẹ́ ló ṣe dá ṣe. You can.
Iṣẹ́ ló ṣe dá ṣe.
Owó ò ṣe dáná.
Owó ò ṣe dáná.
You can only work by yourself, but the money that you hand from it, you can't spend it alone.
So you make the money, but
yes,
it's not just for you.
It's not just for you.
No, after this, I can learn that adage.
And that's true. It's not possible for me to spend all the money that I hand for my job on myself only.
Yes.
I'll be a selfish person.
Yes. So what I'm hearing you say is, when you pay yourself first and you set up those structures, those financial plans, that way you even know how much you have to give. Okay.
And stay within that. Don't get yourself into trouble. That's where some people may get into trouble by that. Because when we have to make our payments in America, you have to pay your bills. You can't call anybody to come and help you.
That's true. You can call a friend. Phone a friend. Okay.
You can. So once you do that, and some of my, I've had people that said they have a list. Okay. So once I help you this month, you come next month. No, I have people still in line. So it may take me another 6 months to get back to you, or a year to get back to you, because I have a list of people that I need to. You're not the only one that have helped me in the past or that I want to help.
Essentially a payroll system.
Yes.
Wow. So how do you, being that you've lived here for a long time, how do you think about investment in like your home country at all, if you do? Is that something that you think, people who live in America but have dependents or relatives in a different country, is that something you think that they should think about?
this is just my own take on that, and I don't think there's a 100% right way. For me, at this point in my career or in my time in America, I now know of a lot of where I can put my money, where I invest my money and get good returns. That means I don't need to take my money back home, but I can also tell you that there are a lot of good investment vehicle back home. Okay? One thing that I won't do, just like we have the stock markets in America and various investment vehicles, Nigeria has that too. Just like I said, people don't know. It's the same thing. They don't know. There's money market in Nigeria. There's treasury bill. There's investment vehicle back in Nigeria too. The people that knows. It's not just buying land and buying property. People don't know. One thing that I personally is like opening up a business that I'm not directly overseeing. Okay, I'm not managing. I'm just giving them the capital to run a business, a day-to-day business that's supposed to be generating income and paying, I won't do that, and I'm not going to advise anybody to do that because it's difficult. Okay? You are not there and they're looking at you, you're in America, that I won't do. I'm not opposed to somebody buying land and selling it. I've done it and I've gotten good return from it. Like, Nigeria, the way things appreciate, it's totally a different ball game compared to America. So if you have trustworthy people and you do it the right way, buying land, buying property, in good area with good papers, what the purpose is for, all well and good. But for where I'm at now, I know a lot of things I can use my money for in America that will give me good return that I don't necessarily need, to.
Okay. So look into the investment vehicles that are available in the country. So for Nigerians, the Nigeria Stock Exchange and all the other media that you have available to you. That's not just land acquisition. And I'm sure there's other stock exchanges for people in other countries as well. Okay. But then you have personally chosen to invest mostly in America. Okay.
That does not say I don't have investments in Nigeria, but it's limited compared to America.
And then investing in America, is it mostly like the index funds? I know you mentioned like mutual funds, index funds. Are those the most type of investments that you do? Or
see, you need to have a diversified portfolio, but I think you want to have more of equities because that's what's going to give you better return in the long term. There's there's the rule of 72. Rule 72. And what that means is, if you take the interest rate that you're earning on your particular investment and divide it by 72, it's going to tell you the approximate number of years that your money will double. So for example, if I have 1,000, okay, and I'm leaving it in my savings account. The interest rate on savings account is at 0.000, whatever it is. Let's just assume it's 1%. 72 divided by 1 is 72. That means it's going to take me 72 years for my 1,000 to double to 2,000.
That's a lifetime.
And remember, that's not going to factor in inflation.
Right.
Inflation is averaging 3%. So, but imagine I'm able to save that 1,000. Okay, I'm getting 3%, 6%, or even 12%. So you want to put your money where you're going to get the maximum return. So you want to increase the number of doubling period. You know, as much doubling that you want. You want to maximize that. And that's what the banks are doing. If you leave your money, they are loaning your own money out. They're getting a better return. And they're giving you nothing. So you want your money to be working for you. Not the other way. So a good mutual fund, S&P 500, okay, over the long term will average, between 9 and 15%. The thing is, you cannot time the stock market. You cannot time the market. It's your time in the market. The market will go up, the market will go down. Over the long run, okay, you will get a good return if you're in a good mutual fund.
Well, this has been a very expansive conversation, and I think you touched on a lot of different things that people could take away from this type of conversation, especially on their journey towards financial stability, how to be more financially stable. But then if there's a young person who is, 17, 18, who is just graduating from high school, about to get into college, or even a younger person than that, or a young professional who is watching this, what is one thing that you want them to hold on to, if nothing else?
One thing that is inevitable to everybody is we're all going to use money. We all need money.
Sure.
So you need to understand how money works and use it to your advantage, not against you. So the earlier you know that, the better it's going to be for you on the long run. You want to go to college, is money. You don't want to take a loan. You want to sacrifice time and apply for as many scholarships that you're not going to need to pay for anything. And trust me, if you are not lazy, you can use scholarship to fund college without student loan. And if you are not able to fully fund it for some, you can do it as you go and pay cash. Do not get into student loan.
Okay, I think that's very good. I agree with that. The ideal situation is not having student loans. I also know examples of people who either their schools don't have scholarships or who write scholarships. So maybe they have partial loans or any loan, maybe federal loans as well. What would you then say to those people? If I have, and I know some of those federal loans have low interest rates, say 1 to 3%, and they just couldn't find any other way to fund their education, so they had to get the loan, and now they have it. Would you advise them to pay it off since the interest rate is low, or what would you advise someone like that to do?
You mean if you've already gotten the loan?
If you already have the loan, or you are in the process of searching for colleges or about to go to college, and you don't have any scholarships available to you, your parents don't have any funds set up for you, and things just play out in a way that you have to take a loan to go to college.
So let me tell you what I would do, knowing what I know today. If I was a 17-year-old with what I know today, and I have all this knowledge, and my parents cannot afford to pay for my college, I will go the community college route. Okay, for the most part, if you go to community college within your locality, it's probably free. Okay? I will do the community college route. Okay? I will be working and saving. transfer, to a college after 2 years. Okay, maximize on how much scholarship that I can get. Okay, even for the college, I'll be working and paying as I go. Nobody is timing you on how long is you to finish college.
Okay. Can we talk about debt a bit? Because this debt in America is a very big deal. And when you had been speaking earlier, you had talked about your experience with credit cards, and I wish I met somebody like you several years ago when I first came here, because the concept of credit cards was something I also did not understand. Like you had mentioned as well, we mostly deal on cash. At least back in the days, I think the credit system in most countries are also evolving over time. But at least back in the days, we we only dealt with cash, right? So then coming here, you have a credit card, and then that's just like money that you have that you can spend, which you have not earned, quite frankly. And it's very implicit. You don't see what's happening until you are very deep inside, and sometimes it's a cycle that just keeps going. But at the same time, the system here almost makes it impossible for somebody to not have any type of debt on their road to, financial independence, or what people might call financial freedom. And one of the biggest ones that people get into is mortgage. There's not many people who can afford to just buy a house on cash, So the vast majority of people in America would have to get a loan from a bank or a mortgage company. So debt is something that people kind of know that they have to deal with somehow. And now you've referenced good debt and bad debt. So how do you judge what a good debt and bad debt is? And, just before you answer, for credit cards, for example, most people have credit cards, even people who are not like owing on their credit cards or have like a lot of debt on it, because you can, as people would say sometimes, if you use it the right way, you could get like the rewards and all of that. So beyond credit cards and even just like all of the debts, how do you from experience have any reference points for how you make the decisions on what debts you should get into and which ones you should avoid?
Yeah. So when I have people tell me, no, you need to build your credit score. Okay. I remember my first credit card was Macy's credit card. Okay. I think it was $100 that I was approved for. Okay. From $100 to $200, then I got Capital One, I got Discover, I got American Express, about 4 different credit cards. Okay, even that was, I was very careful, okay, in terms of, but I'll tell you at a point in time, I had about 10,000 in credit card debt. Don't ask me why, because I think I was, very careful.
Right.
I know it became so stressful to me. Okay. Then I had a mortgage. I had 2 car loans. Remember I told you I bought my first car, $500 cash. But as things, started elevating, I'm elevating myself too. The American dream, what everybody's doing. And that became very stressful, because what I saw is I'm working and my money is just going towards paying debt. And I said, you can't live this way. And you know us from Nigeria too, we send money back home. So the money you earn, everything just goes paying debt. Okay, and I said, this cannot be the way to do things. So, knowing what I know now, it's almost, you cannot do without credit card to build your credit score. Okay? But what you need to do is you use it for what you can afford, and you make sure that you pay it off. You treat it like cash. You see, what they've done is they've taken out the emotion. You try this, have $50 in your hand and go to a store. Okay? And I want you to just buy one item for $50 and give them that $50. You will see it's very, very difficult for you to part away with that $50. But if you're paying with credit card, you will swipe it because it's not, to you, it's not money. Because you're not giving physical cash. And they know that. That's why it's encouraged. Try it, just go. Just buy one thing for $50 on $100 and give them the cash. And make sure it's the only money that you have.
Right.
Make sure it's the only money that you have. And see how easy is it for you to part away with that $50. And go and do it after a day that you've worked very hard, that you're tired. Go and do it that day. And try to see if you're going to be able to easy depart with the $50. So you need that to build your credit score. Use it, pay it off. That's building your credit score. When people say, "Oh, you need to have a balance," no, that's not true. You don't need to have a balance. You need to have a revolving card that you're paying. That's building up your credit score. Okay? In terms of mortgage, because with credit card, you may buy something for $100 and you're making minimum payment. By the time you finish paying, you must have paid 3 or 4 times your original charge. You can see that it's working against you. And the worst part of that is if your credit card is also from the bank that you have your account with, okay, and you're using their credit card and you're not paying it off, it's as if you're borrowing your own money and paying interest on your own money. So in terms of good credit, like you said, it's almost difficult for ordinary people to buy a house without having a mortgage, except you're a millionaire or whatever. Almost, I would say 70% of us have to go to mortgage. But if you go to mortgage the right way, okay, I will tell you my first time it was not the right way. You need to have at least 20% down payment when you want to buy a house.
Why is that?
Because that will give you a good rate. Okay? There's what is called loan to value. Okay? But you need to have at least 20% of the purchase price of the home that you want to buy. Okay? Obviously, you need to have a good credit score. That is why you need that. So you need to have been saving, at least to put in a 20% down payment. That will give you a good interest rate. And you also have some money saved aside too, because you're going to need it. You're moving from either renting to owning a home. I did not have that when I bought my first home. Okay? The other thing is, you have different loan term. A typical, regular one is the 30 year. If you're doing a 30-year loan, which is most likely going to be your first one, with a 20% down payment, there's what is called bi-monthly payment. So, usually you pay your mortgage monthly, but there's also an option for you to pay twice a month. By doing that, that can reduce a 30-year loan term from 30 years to 27, because by just doing bi-monthly payment, instead of paying 12 times a year, it's 24 times, because interest is calculated on a daily basis.
So the compounding interest is much lower.
Reduced.
Okay.
If people look at their amortization schedule when they buy a house, if you don't feel something, because when you look at it, for example, my house, my purchase price is 150. Okay. And the amortization schedule says by the time I finish paying after 30 years, I will have paid like 400 or $300,000. My initial loan is 150. At the end of my loan term, I will have paid 350, 300. Look at that. That means you've given the mortgage company that much money. So by saying that, you should be eager to pay this as fast as possible. So one way to do that is the bi-monthly payment. The additional way is when you even do that, put a little extra on the principal. As you have money, instead of going out to eat or buying pizza or going out to eat, put extra money on the principal. You want to pay as fast as possible. So mortgage is a good debt because one of the fastest way of becoming a millionaire is mortgage.
It's like real estate investments in general.
Well, mortgage in general. In particular.
Okay.
Because as you know, house we generally appreciate unless you have the market, whatever. But house will appreciate. And once you finish paying off your home, that means the full equity in your home is yours. So for example, if I buy a house for 250, okay? If I live in the house for at least 10 years, 15 years, okay? I think it will have doubled, in my original cost. And if by that 10 years or whatever, I've finished paying it, that means the whole equity is mine. And that's part of your net worth. That's part of your net worth. That means the difference between your asset and your liability. So you want to be building your assets and reducing your liability. Okay? And part of doing that is, buying a home. The worth of your home is on your asset side. The balance you own on the mortgage is on the liability side. So the more I pay off my liability, my asset is growing. And your retirement account is also part of your assets. Your emergency fund is also part of your assets. Okay, your short-term fund is also part of your assets. So you want to be building your asset and reducing your liability. And credit card is liability.